Semi stocks ripping higher this month, far outpacing the broader market. But our next guest says it might be time to fade that rally. It's time to go off the charts with Chris Verrone of Strategas, a Baird company. Chris, take it away.
Yeah, Courtney, great to be here. Listen, I think when we talk about the semis in particular, first we just need to put it in context of the broader market. Where are we in this bear market? What does this rally mean? How does it change the script? And we really look at three things. If the bear market's going to turn here, I would say, number one, we need better breadth, we need the macro to improve, and we need leadership to turn over. So I brought along some charts, and we'll just start looking at some of the internals here. Something that we see historically, when you're coming off a low, if a bounce is going to turn into a durable advance, say a new bull market, you want to see the share of advancing stocks every day really start to surge. I think it's early to make that case. I mean, breadth has been maybe a little bit better, let's say, over the last week or so, but I wouldn't say the internals are surging here. I think, secondly, let's remember, the bar has to be high here. I mean, this is the seventh time that the triple Qs has tried to rally this year. We're up about 12% off the lows. I think 320 on triple Qs is a really, really big level here, just in terms of evaluating where this can go. And then with respect to the macro, so you have to go back to June 9th, the last time the S&P closed around 4,000. So we just compared some macro inputs today versus then. They're not much better. I mean, credit is wider, euro is weaker, curve is inverted. I mean, Bitcoin is still 25% below where it was just on June 9th, despite this rally. And then it brings us to the last point with respect to leadership and semis. And I think semis have been such an integral part of this market over the last decade. I think we should look to them for some signal here. And our suspicion is that they're rallying in a bear market, or they're rallying in a downtrend. Certainly a big move here over the last week or two. But on the SMH, that 250 neighborhood is a major, major level. Not only are they in an absolute bear market, but they've also, we think, topped relative to the broader market. So I think the bar here is high. Look for leadership to turn, look for macro to improve, look for breadth to get better. If you're going to get to a point where you feel comfortable making a major low call, I'm just not there yet.
So, Chris, you've given us three things to sort of look out for to possibly turn this tide. Yeah. Is there any one data point that you're looking for to maybe move that macro needle as we're talking about the GDP coming out, the Fed meeting, inflation data? Does it all have to go in the same direction for you to see this bounce become an upward trend that's more sustainable?
Yeah, I think anytime in this business you're talking about a change of a trend or a new call, the data is going to be circumstantial, and we got to do our best with the inputs or the facts we have. And that's where I would really emphasize leadership. If this is really going to turn into something, the move out of the semis has to persist. Discretionary has to get better. Banks have to kind of really step in here and take over some leadership. So I think we'll look for those signals. I would say it's still early, a week or 2 weeks into this rally to make that our judgment. I mean, we've been in this bear market for 6 months. The bar, I think, flip the call or flip the script still has to be pretty high here.
Hey, Chris, it's Steve Grasso. So when I look at the chart, I agree with you on the SMH. It's been on a declining trend channel since January, basically. Yeah. It looks like it wants to turn around and sell off. The three top holdings, Taiwan Semi, NVIDIA, Qualcomm. Qualcomm, to me, looks like the best chart in the semis. Although it has lagged, it had lagged for a considerable amount of time, it actually looks like it's leading now. What is your favorite chart in the semis?
Well, Steve, great point. And if you look at the constituents of the SMH, there's 25 stocks in the SMH. Only 4 of them, 4 of 25, are above their 200-day moving average. Analog devices, on semi, Qualcomm, right? So if you're talking about trying to find the best chart in what's otherwise, I still think, a pretty messy group, Qualcomm is certainly higher on that list for us than some of its peers. So I think you're spot on there.
Fair enough. Chris, thank you very much for joining us, going through the charts with us. Let's trade it. Tim, I think you were the one that brought up semis last when we were in our market discussion.
I seem somewhat obsessed with semiconductors, but I think we're supposed to be. And some of the things that Chris is talking about is a charters that's going second and third derivative into looking at just these charts. The ratio of the market to the S&P. So on the way up for 2, 3 years, in fact, for close to 10 years, semiconductors have outperformed the S&P. But if you look at that downtrend, and again, this is a ratio, simply divide the SMH by the SPX. and you get a ratio. And you do this for a lot of stocks to understand relative performance to each other. And I think what Chris is talking about is, first of all, that downtrend where semis peaked against the market on December 1st is a downtrend that I think yesterday, and this is the fun part about charts, they're exact, but they're not exact. We broke through that downtrend. Is that the line in the sand that's adamant? No. And I think you have to consider different factors. Triple Qs, again, I think 310. Until we get there, we're still in a downtrend. And the thing that worries me most right now is I know we talked about how there was such poor sentiment. I'm a little worried about complacency when I look at the VIX. And I look at the VIX with a 23 handle. With all of those factors Chris just talked about, and you plot it on an inverse against the S&P, it looks like when we hit these kinds of lows, the market's actually gone through at least a reasonable kind of period top.
You know, he mentioned Qualcomm. Steve mentioned it as well. That's the name we've talked about. Held the October low around 120. We pointed it out at the time a month or so ago. It's rallied nicely. And that's the name, at least on valuation, you can make a pretty compelling case for, which I think you still can make a case for in earnings on the 27th. But I think we'd all be remiss if we didn't mention the fact that magically NVIDIA's gone from 140 to 180 on some extraordinary trading from some folks in the West Coast and D.C. I know that I bring that up somewhat to be funny, but not because it infuriates people, and it should infuriate people.